In any economic environment, there's always an opportunity to profit from the stock market if you invest in the right companies. So that's why for all the dividend investors out there, I'm going to share with you 3 different companies that are good picks coming into May. And if you guys like the idea of good dividend stocks and boosting your visibility and revenue, make sure you subscribe to this channel because that's what we talk about here all the time. So the big issue with dividend stocks that some companies are facing is you have the issue of slashing dividends or suspending them entirely. So part of this list is choosing companies that aren't that likely to do anything like that with their dividend. These are companies that are positioning themselves to be on top after everything settles and already have good growth opportunities coming in. So the first company we're going to talk about is MasterCard. MasterCard has a very low dividend, but this is where the appreciation is the bigger value sell than the actual dividend. And when you do look at dividend aristocrats, they do have high yields, but you don't really see as much growth. So MasterCard makes up for the growth. You can see the appreciation has really defeated the market. It's been an outperformer. And the interesting thing with MasterCard, the opportunities that exist is because of the pandemic, people are being a lot more careful with staying clean and not touching money. Paperless transactions have gone up a lot ever since the pandemic, and that's going to be something that continues because people don't want to touch money, which could very easily spread disease. China even made it a point to take back some of their paper currency and keep that stored in the bank rather than distributing because of the germs, and they do clean out some of their paper currency as well just to avoid the spread. So you do have a lot of people who aren't going to be going the paper route, and that's where a credit card like a MasterCard can come into big play. So a company like Visa, also really great here. I like MasterCard because of the dividend growth. While we're not even at a 1% yield yet, the dividend, it is something MasterCard can sustain for quite a while given its low payout ratio, and it can become a future dividend aristocrat. The second company that is a good pick is Digital Realty Trust. Now, this is a REIT, which means the dividend gets taxed as ordinary income. It does not get the dividend tax treatment, but this is a company that continues to raise its dividend. And for what's going on now, a company like this is perfect because they specialize in data centers. So you've seen Zoom's stock go up. You've seen people spend more time on Facebook, on Netflix, on YouTube, on all of these places to the point where YouTube has said we have to decrease the quality of our videos so that we could actually accommodate for all these extra people coming to our platform. The way these types of companies survive and are able to function is through data centers. And a company like Digital Realty Trust has the space, has tenants that, I mean, they're not going to leave anytime soon. So it is a company that has a very good future. It recently did beat earnings even with what's going on, but just given the types of tenants that Digital Realty Trust attracts makes it a compelling opportunity moving forward. And the final stock on this list is Cisco. And Cisco, out of all 3 of these, has the highest dividend, has respectable appreciation, and you're still going to see some dividend growth. So while MasterCard is a play where, like, many years later, the dividend's going to look good and you're going to have this awesome appreciation, Cisco gives you some appreciation and a good dividend, a little over 3% at the moment. So Cisco has a few different things going for it. 5G, Cisco is going to be one of the top players in that space. You also have WebEx. While there's a lot of people talking about Zoom because you see Zoom's like rapid growth, you see its stock price. WebEx isn't a publicly traded company, but it is something that Cisco owns, and WebEx is something that really has gained a lot of steam because of the Zoom fallout with the privacy. So Cisco is certainly a great pick. It has a strong balance sheet, so it's not likely to do anything to the dividend other than raise it. So those are my 3 picks. I do want to hear from you guys what picks you have in the comments. This is more of these are like growth picks. So that's why there's nothing like AT&T on the list or anything like that. So I do want to hear from you guys what types of stocks you'd pick and also what you think about these. So signing off until the next video, dream big, achieve greatness, and unlock your potential today.